Have you ever seen a stock that just, well, explodes? You know, one day it's just ticking along and the next it's all anyone is talking about. That is exactly what happened with Protagonist Therapeutics, ticker symbol PTGX. So today, we're going to put on our detective hats and figure out precisely why this stock had such a monster day. Let's dig into the evidence. Okay, so here's the scene of the crime. On October 10th, PTGX didn't just go up, it went ballistic. The stock launched from $67 and change all the way to an $87 close. That's a jump of over 29% in one day. And this wasn't some quiet move either. It happened on a massive wave of trading. This was a full-on market roar. But here's the thing. A move that big always leaves a trail of clues. So the real question for us is, what story are the numbers telling? We're about to sift through all that evidence to figure out what was behind this surge, and maybe even get a hint of what could happen next. To really understand what happened on that one explosive day, you've got to understand the backstory. So our first move is to rewind the tape. Let's look at how this stock was behaving over the last 3 months and see if there's a pattern. So as you can see, that huge jump on October 10th didn't just come out of thin air. I mean, look at this. After trading around $55 in July and taking a quick dip in August, it started this steady, determined climb. That final push to its peak meant it had gained a staggering 58% in just 3 months. This wasn't a sudden shock. It was the climax of a story that had been building for weeks. And this chart right here, this is how you follow the money. Think of trading volume like footprints. In early September, we see a little spike, almost 2 million shares traded. Okay, interesting. 2 weeks later, another spike, this one bigger, at nearly 2.5 million. These were the whispers, the hints of growing excitement. And then, bam, October 10th, the floodgates just burst open. Over 7 million shares changed hands. That, right there, is our smoking gun for massive investor interest. All right, so the price and volume give us the backstory. Now it's time to open up the analyst's toolkit. We're going to dive into the technical indicators to get a real forensic snapshot of the stock's health right at the moment of that big surge. But before we get to the tools, we need to get one key concept down: overbought. Here's an easy way to think about it. Imagine a sprinter who's been running at top speed for way too long. I mean, they've had an incredible run, but they're probably exhausted, right? They might be due for a rest or even a little slowdown. For a stock, overbought means the exact same thing. It suggests a pullback could be on the horizon. And this is where our case gets really interesting. It's not just one little warning light flashing on the dashboard. The whole thing is lit up. The Relative Strength Index, or RSI, is at 83. That's deep in the red zone. The Money Flow Index, the Commodity Channel Index, they're all telling us the exact same story. And when multiple separate tools all point to the same conclusion, analysts really pay attention. The message couldn't be clearer. This stock is way into overbought territory. But wait, here's the twist in our investigation. Despite all those flashing red lights, the underlying momentum is just incredibly powerful. The stock's price is soaring high above all of its key moving averages. Those averages are basically the stock's typical price over different time periods, and being this far above them tells us the upward trend isn't just strong, it's absolutely dominant. Now, analysts use two main types of these averages. There's the simple moving average, or SMA, which is just a straightforward average. Then there's the exponential moving average, the EMA, which is a little bit smarter. It gives more weight to the most recent prices, so it reacts faster. In a crazy, fast-moving case like this one, the EMA is super important because it gives us a much better read on the real, current strength of this amazing run. Okay, so what have we got? A super powerful trend, but with some serious warning signs flashing. The next logical step in our investigation is to map out the battlefield. Where are the key price levels where we can expect buyers and sellers to really dig in and fight? And this is that map. Up at the top, you've got resistance at $93.24. Think of that as the ceiling. The price just hit its head on. Then, below the current price, we have layers of support. The first floor is that fast-moving average around $72.81. If the price starts to fall, that's the first place we'd expect buyers to show up. But below that, you have a much stronger foundation down around $67.38. That level is solid because a ton of shares were traded there before, creating a really strong base. So how do we make an educated guess about where the price might go tomorrow?
Well, analysts have a handy tool for that called the average true range, or ATR. It basically measures how jumpy the stock has been lately. For PTGX, that number is about $4.21. So you just add and subtract that from the $87 closing price, and you get a likely trading range for the next day, somewhere between about $82.79 on the low end and $91.21 on the high end.
All right, detective work is done. We've gathered all the evidence, the history, the technicals, the key levels. Now we can put it all together and outline the three most likely ways this whole story could play out from here. First up, the bull case. In this scenario, the momentum is just too powerful to stop. The buyers stay completely in charge, they smash right through that $93 ceiling we talked about, and the stock just continues its incredible climb, powered by all that investor excitement we saw. Then, of course, there's the bear case. This is where those overbought signals were spot on. Our sprinter is exhausted. Investors look at their huge gains and decide it's time to cash in. The selling starts, and the price begins to pull back, looking for that first support floor we mapped out around the $72 mark. And finally, you have the sideways case. Here, the stock doesn't crash, but it doesn't keep soaring either. It just takes the breather. The price kind of bounces around in a range, maybe between $80 and $90, as the entire market just hits the pause button to digest what just happened and figure out what this company is really worth now.
So, after combing through all the evidence, what's the final conclusion of our investigation? What's the core truth of this stock situation at this very moment?
You know, when you boil it all down, our investigation reveals a classic Wall Street showdown. In one corner, you have an undeniably powerful, confirmed uptrend, and it's backed by a tidal wave of investor interest. But in the other corner, you have multiple crystal-clear technical signals screaming that the stock has gone too far, too fast. It's truly the irresistible force of momentum crashing into the immovable object of overbought warnings.
And so the case file on PTGX stays open, and it leaves us with the one question every single trader and investor has to answer for themselves. When you're staring at a runaway trend that's covered in warning signs, do you bet on the momentum? Or do you listen to the risk? How you answer that, well, that's the art of the game.